Hey guys, and welcome back to our second video lecture dealing with Chapter 2. And Chapter 2 is all about the accounting process. In this video, we're going to look at two very important items. First, we're going to look at the purpose of the account, right? What is an account? What's the nature of the account? What's the format of the account? And then we're going to get into the debits and the credits, or a system of debits and credits. So when we think about an account, right, an account is nothing more than an individual record of increases and decreases. That's all it is, right? So every asset, every liability, every stockholder's equity has an account. So we have an account for, think about assets. We have an account for cash. We have an account for accounts receivable. We have an account for prepaid rent. We have an account for equipment. Same thing with liabilities, right? We have an account for accounts payable. We have an account for notes payable. Same thing with stockholders' equity items. We have an account for revenue. We have an account for every expense that we have. So if we look here at the T account, it's what they're called, because if you notice, we have a bar going across and it has the account name, cash, and then we have this main bar coming down the middle, which separates the left side from the right side. These are T accounts. T accounts are sexy, all right? I know I'm a nerd, but T accounts are amazing. Reason why is they show us all the transactions that increase the account. We see here on the left. They show us all the transactions that decrease the account. We see here on the right. And then they provide us with a balance. The balance of the cash account is $40,000. Okay, so notice it has 1, 2, 4, 5, 6, 7. Right? Those refer to the transactions that we looked at in the previous video. All right. So if you remember, first thing we looked at was the Mike contributed $30,000 of cash to the corporation in exchange for common stock, right? So we only see the one side of that transaction, the cash side, right? Well, where's the common stock side? Well, guess what? It's not on this slide, but somewhere in the accounting equation or in the accounting system, there's another T account with common stock that shows the common stock going up by 30,000. Okay, so this is a T account. We're going to use this T account so we can learn our debits and credits. Okay, so let's go ahead and describe the system of debits and credits. Okay, this slide is very, 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 very important. Okay, you will unfortunately have to memorize this. This is just simple rote memorization, right? We got to know our debits and credits, because if we don't know our debits and credits, guess what? We can't do accounting. We can't do our journal entries, okay? So first thing we need to know is that debits and credits, those are just terms that we use to indicate what recording we're doing within a transaction, or what recording we're doing in that account, okay? The left side is always the debit side. The right side, always the credit side. Okay, so we see here in the middle our T account. Okay, and we have any type of account, whatever it is, cash, receivable, or accounts receivable, liabilities, accounts payable, notes payable, stockholders' equity account. We see revenue up here. We'd see our expenses up here. But the left side are always the debit, right side always the credit. Okay. Now, this exhibit 2-5, if I were you, I strongly encourage you to put this in a note card to memorize it, okay? As we go through the journal entries, I'll do a demo problem for the homework. I will bore you to death, and I apologize, because we have to get it in our long-term memory, and the only way to do that is just to memorize this stuff. So let's look at our assets, okay? Assets, any asset, cash, receivables, or accounts receivable, prepaid rent or prepaid insurance, property, plant, and equipment. Any asset increases with the debit, decreases with the credit. Debit is the normal balance side. So you have to memorize that assets are increased with the debit, decreased with the credit. The normal balance side is the debit side for assets. Okay? Then we look at liabilities. Well, okay. What are our liabilities? Accounts payable, notes payable, salaries and wages payable. We'll see that eventually. Basically, any payable is a liability, okay? Liabilities behave opposite of assets. What do you mean by that? Well, what I mean is all liabilities increase with the credit, decrease with the debit. Credit is the normal balance side for liabilities, okay? Stockholders' equity. Well, in total, just the stockholders' equity section increases with the credit, decreases with the debit, credits the normal balance side. Okay, so liabilities and stockholders' equity, they behave the same way, meaning that credits increase, debits decrease, credits the normal balance side. Total opposite of assets. Okay. Then we get into common stock. How does common stock behave? Well, if you notice, common stock behaves identical to stockholders' equity, right? Meaning, stockholders' equity increases with the credit, decreases with the debit. Credit is the normal balance side, okay? Retained earnings. Retained earnings behaves in the opposite fashion of common stock and stockholders' equity. Well, what do you mean by that? What I mean is retained earnings increase with the credit, decrease with the debit. Credit is the normal balance side. Okay? Or I apologize. All three of them behave the same way. Okay? Now let's look at revenues, right? Because revenues, expenses, and dividends all impact our retained earnings, right? So how does a revenue behave? Well, a revenue increases with the credit, decreases with the debit, credits the normal balance side. What about expenses? Well, expenses increase with the debit, decrease with the credit. For an expense, debit is the normal balance side, okay? Dividends. How do dividends behave? Well, dividends increase with the debit, decrease with the credit. Debit is the normal balance side for a dividend. You have to memorize that, okay? You just have to. There's no way around it. Put it on a note card. Read it 20 times a day. Before you leave the house in the morning to go to work, recite that, right? Get to work before you start working, pull out your note card, recite it. You have to memorize this stuff. Trust me, this course will go so much easier if you learn your debits and credits and you memorize them, okay? All right, so let's look at the process of journaling, right, and posting, okay? So what we have here, you see, is the general journal, right? And remember, we said the second step is we got to record. We have to record in a journal. Here's what the journal looks like, okay? Notice the left side has the date. Then in the middle, we have our description or the account titles that are going to be affected by that transaction. And then we have a debit side and a credit side, okay? So what we do here is basically we post to that ledger, that general ledger, okay? So take, for example, that first example we had when Mike contributed $30,000 to the corporation in exchange for $30,000 of common stock, okay? Well, what did we do? Well, we hit our cash and we hit our common stock, okay? We read the transaction, we identified that those are two of the accounts. Now we got to translate it into accountingese, for lack of a better term, right? Well, cash. What is cash? Cash is an asset. How do we increase an asset? With a debit. How do we decrease an asset? With a credit. Debit is the normal balance side for an asset. So what's happened in the transaction? Well, we already identified that our cash is going up, right? Because assets increase with a debit, I have to debit my cash, okay? Common stock. Well, what happened to my common stock in that transaction? Well, my common stock went up, right? Okay. We already identified that. We already recognized that cash or common stock goes up, okay? So then we got to think, well, common stock, how do I increase common stock? Well, common stock increases with a credit, decreases with a debit, credits the normal balance side. So since I'm increasing common stock, I have to credit common stock. Okay. And then we go through, and once we have once we do our general journal, we actually have to post those, right? We post them to our ledger or to our T accounts. So we see that debit to cash flows to the cash account, and we enter 30 grand on the left side. Why the left side? Because it's a debit. Why are we debiting cash? Because cash is increasing. But why the debit? Because assets, which cash is an asset, increases with a debit. Okay? Same thing with common stock. I need to credit my common stock. Well, why am I crediting common stock? Well, first off, I analyze the transaction and common stock goes up. I did my journal entry that says I need to credit common stock because common stock increases with a credit. Now I need to post that to the common stock account. Okay, and we go all the way through each of these transactions. Right, we paid a wage to an employee. Okay, let's just take it a step further. On December 23rd, WebWork paid its employee $16.20, right? Paid him cash upon completion of her first 2 weeks on the job. Okay, so let's identify how this impacts, or let's analyze how this impacts the accounting equation. Well, cash is going to decrease, right? Stockholders' equity is also decreasing. Well, that's an expense, right? It's a wage expense, but remember, expenses decrease stockholders' equity, okay? So I analyzed everything, right? I know my cash goes down. I know my stockholders' equity decreases, specifically because we have a wage expense, right? That's the account that's hit within that stockholders' equity. So I need to do my journal entry. Okay, well, wage expense is an expense. My expense is increasing here, right? The expense goes up. But the effect that increase in the expense has on stockholders' equity, says we need to decrease stockholders' equity. Okay, so that's why we're subtracting when we analyze. But when we're posting to the journal entry, we're actually debiting that expense because we're increasing that expense. Okay, we always increase expenses. Okay, whenever we incur an expense goes up, that means we have to debit it. Okay, you kind of got to know that or memorize that. Expenses going up have to be debited. Why did we subtract it when we analyzed it? Because we're viewing it in the form of stockholders' equity, and an expense decreases stockholders' equity. I hope that makes sense. If not, reach out to me. Okay, I'd be happy to have a discussion, phone discussion, whatever, and answer your questions and talk this out. So let's journalize what's going on. Cash is going down and expenses increasing. Okay, well, wage expenses are an expense. How do I increase my expenses? With a debit, so I have to debit my expense. What's happening to cash? Well, cash is decreasing, right? How do I decrease my cash? With a credit. Okay. Okay. When we come back in our next video, we're going to look at the trial balance. We went over a lot here. I know that there's a lot going on in just this little video. Again, the key takeaway here is knowing our debits and our credits, knowing what account increases with a debit, what account decreases with a debit, what account increases with a credit, and what account decreases with the credit, as well as what are the normal balance sides, okay? So please put this in a note card. Please memorize it. I promise you, this course will go so much easier if you just right off the bat memorize this stuff, right? Once we get further along, we nail down our debits and credits. Then we start having a little bit, I think it's fun, having a little more fun looking at the financial statements, putting together the financial statements, analyzing the financial statements, interpreting them. So that'll be a lot of fun. I know it's kind of dull right now. I get it. I know. I went through it. You'll get through it. So just memorize your debits and your credits. So tune back in our next video where we'll go ahead and look at the trial balance.